Welcome to HYCM's webinar, FX Week Ahead Live Market Analysis with myself, Giles Cochran, the Chief Currency Analyst here at HYCM. Very warm welcome. Hope everybody's doing okay. Good to have you back. Lolu, Mohammed, Rick, great to see you. Shahzad, glad you could make it. Titus, good to have you here as well. Hasib, Kingsley, Mohammed, lovely. Just giving people a moment as they're coming into the webinar. And just as people are coming in, I'll just go through the disclaimer. Don't forget that the whole purpose of these webinars is that you look over my shoulder, someone with a professional trading background, and you see how I go about making decisions and understanding market dynamics. And the whole idea is that that's an educational process that helps us plan for the week ahead and also helps you see how I go about making decisions so you can make better decisions for yourselves in the future. And the thing to be aware of, that this isn't a trading signal service. So even though we'll be talking about entries, exits, different currency pairs and commodities, it isn't an invitation to trade. It isn't a signal trading service. And the reason for that is market dynamics are fluid. They change moment by moment, day to day. So I just wanted to make that clear as we get going into the session. I think most people are here now, so we can get started. Good to have you, Hassan, Warren, good to have you guys as well. Schwartz, glad you could make it. So let's get stuck into the session that we have. So we're going to start the week with a quick market recap, and the best way for us to do that is just to go and see how the market has been moving since we've started the session. So let's go over and have a look at the movements that we have. So the first thing to look at is the bond market. So we can see that in a risk-on environment, you would expect bond yields to rise higher. And we're seeing bond yields remaining sort of within their recent range, but there's a bias slightly to the upside. So US, German, Canadian government bonds just pushing to the higher end of their daily range. Japanese bonds moving higher, UK government bonds moving higher as well. So it's a moderate to upside bias in bond yields. Looking at the equity space, we can see that equity futures markets have been moving very high. So the S&P 500, Dow Jones, NASDAQ futures markets. Now remember, this is the market before the cash open in the US. The cash open is when you see the cash S&P 500, Dow and NASDAQ open. These are the futures market. So the futures markets are showing that the US is heading for a positive cash open. We're seeing plenty of upside in equity markets, upside across the DAX, UK 100, Euro stocks, ASX 200, and volatility moving down towards the low of the day. So that is a positive move for risk as we start the session. Taking a look at commodities, we can see, let's just get rid of that, and back. See gold market pushing a little bit higher. Copper has been supported on the day. We also can see the oil complex moving higher as well. So that's what we expect in this risk positive environment. And gold is being pushed higher by the weakening dollar. So we're seeing the dollar weakening throughout the session, which is what we'd expect with a positive risk sentiment. You can see the dollar just trying to push back down to that 94.34. Very key descending trend line going all the way back from 2011. You see that when that trend line was broken, that's important, and now technically price is trying to stay and push back down below on the dollar index. So that's an important zone that we're currently at. And we've seen upside in the US dollar pairs with the weakness of the dollar. Pound is an interesting one. I want to cover that for us. Now, the outlook for the pound, broadly speaking, is weak. We have the more comments from Bank of England's Tenreo over the weekend, saying that he was sort of, saw some good things about negative interest rates, and that the Bank of England is sort of, actively discussing negative interest rates. We also had the fact that the end of the UK furlough scheme is closing in October. There is a job retention scheme by the UK's Chancellor, but it's not as robust or as strong as the job furlough scheme that the UK had, so that's a downgrade. And there's economic headwinds ahead for the UK with rising COVID-19 cases, further lockdowns and restrictions expected. So the broad outlook for the pound is to sell. But why are we seeing this strength? Let me explain to you why we're seeing this strength in the pound. Number one, it is dollar weakness. So this dollar weakness lifts all the pound pair, all the major pairs that are paired against the US dollar are lifted on this dollar index weakness. We're also seeing upside in the pound because there's expectations that with formal negotiations are starting again tomorrow for Brexit negotiations. Now let's just have a little look at one of these key dates. We can see one of the key dates for the UK EU negotiation is the 15th to 16th of October. And so there's a little bit of optimism that maybe there'll be a potential deal that gets organised in time for this 15th to 16th of October EU Council meeting. Now, the chances of this happening are slim, but the market's sort of holding on to that hope after some positive comments from a Brexit negotiator, Frost, here in the UK. So that's a story that's likely to have ebbs and flows. The present pound strength has been on that optimism, but expect lots of, ups and downs in the pound on Brexit headlines. So that's going to be very important to do. So do bear that in mind with the pound. That's why we're seeing the pound upside at the moment. Now, an interesting pair I want to show you is the euro pound. Now, the euro pound, the euro pound has broken out of this symmetrical triangle pattern. You can see that strong break to the downside. Now, at the moment, the pound strength is on this optimism about an EU-UK trade deal potentially being arranged, and as negotiations start tomorrow, so we're seeing pound strength. Now, we also have ECB President Lagarde speaking later this afternoon. So if we just go over here, you can see that Lagarde is speaking. Let's just have a look. At 2:45. So that is 1:45 GMT time. So in 1 hour and about 10 minutes, Christine Lagarde will be speaking. Now, this is what I'm looking for. If Christine Lagarde, it starts to show some concern about euro strength or concern about euro inflation, then we can expect further euro pound downside. And so any retracement back up to that 0.9100, that 0.130 region, any sort of return back up to this level could be considered suitable for shorting. So I want to make sure that Christine Lagarde doesn't say anything that's very bullish for the euro. If she maintains the last ECB's rate meeting, that not too concerned about euro strength, not too concerned about euro inflation, that could be positive for the euro. But if she starts to show a little bit of concern about euro strength or slow inflation in the eurozone, then that opens up potential for more downside in the euro pound. And as the pound is strengthening on Brexit optimism for today, then we'd expect potential sellers from this region. Now, key thing to be aware of is these trading the pound at the moment is dangerous in the sense that it's very volatile, and headlines can flip and move the pound 40, 50, 60 plus points at any given time. So you have to be very aware of that in the pound at the moment. And if a Brexit deal is organised, and say there is a very, a deal potentially announced, then expect pound strength going forward. More likely, there's likely to be further delays, further conflict between the EU and the UK. Here, you can take a screenshot of these. Here is the key issues to be aware of, okay? The key issues to be aware of are issues around state aid, fishing, and equivalents for the financial services. These are some of the big issues that are still needed to be organised before the EU and the UK strike a trade deal. So do keep a snapshot of that. That's what we need to be looking at. So if we get any kind of, breakthrough in these areas, that could be possibly good news for the pound. Most likely, these are the areas to look at. Now, we've got the internal market bill is also being debated this week as well in the comments. So there's plenty of risk coming up for the pound ahead. So do keep that in mind as we go through and into the session. It's a big potential week for the pound and definitely one to be looking at. Copper is also a very interesting commodity to be looking at. Now with copper, what we've seen quite a lot of heavy selling last week on copper. Now copper is often known as Dr. Copper, and the reason it's known as Dr. Copper is because the health of the global economy is often gauged by the copper market. When economy is growing or looking like expanding, copper's in demand. Housing needs wiring, building needs wiring, green technology needs different conductors, lots of wiring. So copper is that commodity of growth and expansion. Now, we saw some selling in copper into last week, and the reason for selling in copper was quite simply because of the rising COVID-19 cases across the world, concerns about future lockdowns, concerns about falling demand in growth. That's why copper fell. You can see copper's breaking through this key trend line. Now, for myself, this is a key selling area that as long as copper remains below this key trend line, I see more downside for copper. Stocks running above the highs, looking for a move back down to that 2.80, this key support area here. This looks an attractive area for copper sellers to take profit. So I'm looking very carefully and actively for copper sellers from market. Stops will be obviously running above those highs. So that's one to be looking out for. The risks to that outlook is if we see demand picking up from China. If China demand is still heavy, that will be positive for copper and would invalidate this outlook. The other thing to be looking out for is Chile and Peru. They are the largest exporters of copper. Now, South America has quite a few COVID-19 cases. So if COVID-19 cases shut down Chile and Peruvian copper mines, that will also reduce demand and boost up copper prices. So that's another key issue. So the sell factors are slowing global growth, rising COVID-19 cases, less demand. The bull case is if Chinese demand holds up, or if we get a problem in the supply chain because of COVID-19, that can also artificially boost prices. So that's definitely one to be looking out for. Another key market to be looking out for today is if we see, now I'll come on to this in a minute, but one of the key things for this week is going to be the US dollar and the televised presidential election. I just want to show you gold's a very, very important pivot at the moment. Now, if we just take a look at the gold chart, you can see that gold prices are just rejecting this 100 exponential moving average. Now, the picture for gold, longer term, you can see this strong run that gold's had all year. Now, the reason for gold's strong run is we've had low interest rates, we've had quantitative easing expanding, and this expansion of quantitative easing means that currencies devalue. Money can be physical, like the money in our wallets, but money can also be digital, like the money in our bank accounts. And what quantitative easing is, it's the printing, as it were, of digital money. That digital money is then used to buy things like government bonds. And these government bonds essentially keep bond yields low. So if we go back to our bond yield charts, you can see that bond yields can be artificially kept low. So in Australia, for instance, the Australian Reserve Bank of Australia targets the yield of certain bonds to artificially keep them low. Buy the bonds, that keeps yields low, which keeps borrowing low. Now, as long as borrowing low, that encourages expansion. It also means that hard currencies have less value because the money supply has been artificially inflated. So a commodity like gold in a low interest rate, high quantitative easing environment becomes more valuable, particularly when holding cash means you can lose money, because holding cash when you allow for inflation means that over years the money in your bank account is actually losing value. So that makes gold more attractive as well at the moment. This is why gold's being bought by investors since the start of the year. And this is why there's still potentially more upside for gold. And this is potentially one interesting place. Now, the US dollar is going to be decided by this presidential election debate, most likely this week. I'll come on to that in a minute. But I just want to point this out technically, that for any gold buyers who are convinced that the technical picture is still bullish, the fundamental picture is still bullish for gold, some investors will be buying here with short stops just underneath that 1845 region. Okay, that just provides a short-term place to have a low risk, potentially high reward entry. And the next support is down at this 1820, 1800 level. You can see this heavy supply level that's here. You can see that when price was last here, look how price shot up on this heavy demand level that was here rather, and this demand level remains in place. So if that does break, we would expect buyers around this 1820, 1800 level with stops just running below there. I just want to point that out. Gold chart is worth looking at the moment. Now let's go back to our main presentation. Let's just give me one moment. There we go. So go back to our main screen. Yeah, and in fact, let's just have a little look at this. Let me just. Yeah, no, that's okay. Okay. So we're seeing at the moment, we're seeing this risk on scenario. We're seeing volatility is dropping, stocks are rallying higher, commodities are rising higher, bond yields are rising. This is a risk on scenario. Now, in a risk on scenario, we'd expect the Aussie New Zealand dollar CAD to be stronger. And we expect the US dollar, Japanese yen, and Swiss franc to weaken. Okay, so that's broadly what we're seeing in the markets at the moment. We are seeing that sort of risk on sentiment that's flowing through the markets. It's a mixed tone in the currency space that at the moment we've got a little bit of CAD weakness, a bit of a New Zealand dollar weakness when we'd expect them to be stronger. So that's just worth noting, but that is certainly, we're more risk on than we are risk off in the markets. Now, one thing to point out is the interesting aspect of these COVID-19 cases. Do you remember last week we saw some quite heavy selling in the equity markets, and a lot of this is over concern about the return of COVID-19 and the lockdowns and the impact that's going to have on companies going forward. One thing to be aware of, that death rates will be carefully watched. So the death rates have been relatively low, but the excessive deaths are still relatively high compared to the historical average. So if you look at the UK, for instance, you can see that historical deaths are, just nearly 50% the normal historic average for deaths around the same dates. And then deaths in like Peru are 150%, 3 times the normal expected death rate. So that is, very, very significant. And looking at the excess deaths, you can see that even though maybe not that many deaths are being reported through COVID-19, you can still see the impacts that COVID-19 is having with the general excess deaths that are in countries. Look at Peru, Ecuador, Italy, UK, many of these countries having above 25% excess deaths at the moment. So that's one careful metric to keep an eye on, just to see what's happening in terms of excess deaths. The cases are rising all the time across Europe, and further restrictions will happen. And those potential restrictions will weigh on equity. So that's one key risk this week, is further equity selling. So be aware of that. This is also a very key week for the US dollar. We have a US presidential debate. Now, this US presidential debate is sort of being carefully eyed at by the market. Now, Joe Biden is 7% ahead in the US polls at the moment. So Biden has a lead going into these elections, but President Trump tends to do very well on televised debates. He's naturally good in front of a camera and thinking on his feet. So that tends to favor President Trump. So Tuesday, Wednesday, we're going to have these presidential debates, and they're likely to give a near-term direction for the US dollar and also a hint about how the dollar will react in the US elections themselves. Now, what's the outlook for a Trump versus Biden victory? Now, this is something to be careful of. Lots and lots of analysts have got different views on what's going to happen with a Trump or a Biden victory. I'm reading different and conflicting reports. So some analysts will say, you know, what's good for Trump is good for the dollar. So it'll be interesting to see what happens on the Tuesday and Wednesday. But if President Trump is perceived to have won the television debate, if that puts him closer in the running for the election, then it'll be interesting to see how the market reacts. My question is this going to be the metric? If Trump does do better than expected, will we see US dollar strength? I'm not sure what reaction we're going to see. And many analysts are saying different things. So this is a time to be very cautious. Let me have a look. I'm going to go back to the other screen. So this is a time to be very cautious. Now I'm going to show you that key area. This is a very, very key area in the dollar index, exactly where we are now. You can see where price is trying to break through this key trend line here. Okay, now if we get above and stay above this trend line, that is a positive for the US dollar. Stay below, that's negative for the US dollar. So we're kind of at that crossroads technically. And look for what happens with the Biden debate and the Trump debate, okay? So if we suddenly find the dollar rising above this area, then that's something to be really paying attention to, okay? And a strong dollar will drag down the pound, euro, the Aussie, and the New Zealand. They'll all get dragged down by a strong US dollar. So that's something very much to be paying careful attention to, very careful attention to going into this televised debate. And another explanation I've heard is that a Biden win opens up the prospect of more stimulus and US dollar strength. So, you know, I'm reading some analysts are saying what's good for Trump is good for the dollar. And some analysts are saying that if Biden wins, that opens up the prospect of more stimulus and US dollar strength. So analysts are divided, so watch out. This is one of those times when you just really want to see what the price action is saying at the time. So don't be surprised, the first 2 days of the week might be quite, there may not be price action. Be careful about getting sucked into any trades when there isn't a clear direction. A lot of the markets have been watching to see what happens between Trump and Biden on this debate. So in terms of getting ready for the week, you've got to be ready for this presidential debate. It's going to be an important time. The other thing we want to look at is the main events that are ahead. So we're going to go back to our other screen, and we're going to have a look at some of the key events that are taking place. You can see we have a very quiet start to the week. We have President Lagarde speaking. Look out for that on the euro US dollar. If we have her being concerned about euro strength, if you have a concerned about inflation, then look for euro US dollar downside. Okay, that's the key thing to be looking out for, and potentially more euro pound downside. That's one to be looking out for. Then we have very light data today, tomorrow, and even into Wednesday. There is not much happening in terms of data. Obviously got some Fed speakers, so look out for the Fed speakers because they can obviously influence the path of the US dollar, and that is a headline risk for Tuesday afternoon. We also have President Lagarde speaking again on the Wednesday. That's again a headline risk for the euro-US dollar pair. So be aware of that. Got the ADP non-farm employment change coming up on Wednesday. That has the potential to move the markets a little bit, but not really in major focus. And again, FOMC members speaking on Wednesday. So look out for that. Kashkari and Bowman, who are speaking on Wednesday afternoon. There's a bank holiday in China on Thursday. There's a slew of PMI data metrics out. The ones we're looking out for is the US dollar PMI. See how the manufacturing PMI is doing. If that is showing expansion and growth, that will be a generally positive for risk, and that will be positive for the S&P 500 and S&P 500 markers. If we start to see manufacturing PMI dipping and dropping lower, that'll be negative for risk, which will be positive US dollar and also negative S&P 500. On Friday, we've got non-farm payroll. Labor data is very important for the US. The US's economy is 70% driven by the US consumer, and the US consumer can obviously only spend if jobs are good. So jobs data is very important for the US economy, and the market's going to be looking to see what that unemployment rate is at. The best result here would be unemployment rate falling, employment change rising, and average hourly earnings rising. Labour market will be watched very carefully to see if any of the slowdowns are starting to be felt more and more in the employment data, particularly the unemployment rate. A big jump in unemployment will be a negative for the US dollar and a negative for risk. So a big event to end the week and start. You can see the run up will be starting from that ISM manufacturing PMI on Thursday. So that's definitely something to be keeping a very tight chain on. Okay, so Schwa is saying, in his opinion, dollar will be weaker if Trump will get re-elected, because Trump always wanted from Fed that interest rates should be lower. Low interest rates mean weak country. Biden win, dollar should go up. Yeah, okay, Schwa, I see what you're saying. Yeah, and I have read some analysts who are saying a Biden win is dollar positive, extra stimulus. Yeah, so you'll have to see. The presidential debate are going to be interesting, and they've got Trump ahead in the polls. Sorry, no, they've got Biden ahead in the polls. So President Trump is according to the polls due to lose the election. It'll be interesting to see what happens with the televised debate, how that goes. That's going to be a really big event for the week. Obviously, the other thing to be keeping a very careful eye on is that US dollar, and particularly around that key trend line, which is being tested at the moment. Okay, guys, has anyone got any other questions? If you've got any questions, please pop them in. I hope I've given you a bit of a rundown on the major things to be looking for. Don't forget Christine Lagarde speaking in about an hour, just under an hour, and looking at the euro-US dollar pair. You can see that if Christine Lagarde mentions anything about concerned about strengthening the euro, concerned about inflation, then expect some more euro-US dollar downside, and that will drag the dollar index higher as well. So, you know, Christine Lagarde could sink the euro here, and that would obviously raise the dollar index. So do keep a look at that. Yeah, and Schwa is pointing out a double bottom in gold. So on the 1 hour chart, in fact, you know, you can see there's almost like a triple bottom there. 1, 2, 3. So for this pattern to play out, if you took a break of 1877, you look at an extension from 48 to 77. So that's about so 48 to 77, about 29. So you can look for a $29 rise from here. Yeah, so a rise just up to this sort of 1908 level. So a break of this level, 18, technically speaking, if this positive risk sentiment maintains, a break of 1877, or even taking or even buying at market with stops underneath here, looking for a move up to that 1900 region, that would make sense with the your thing. Kingsley, like your FA, how can I learn this? I'm not sure I understand what FA is, Kingsley. Please just tell me what FA stands for. So this week, US dollar is going down overall. Well, it depends, Shahzad. This is what I'm saying. We've got this presidential debate happening on Tuesday and Wednesday. And the path of the US dollar is probably going to be decided by this presidential debate, depending on whether Biden or Trump wins. So it's a big week for the US dollar, so certainly to be looking out for. What's been driving the dollar at the moment is, I'll just show you, it is risk tone has been really driving the market. So if you just take a look at the S&P 500 futures, and if we just put the, this is the dollar index, we'll put the dollar index over the top, and what you'll see is as the S&P 500 falls, the dollar index rises. Okay, so you can see here a falling S&P 500 results in a rising US dollar. A rising S&P 500 is a falling dollar. So at the moment we're seeing some strength in the equity markets, and that's why we're seeing the US dollar weaken. And that's because recently the dollar index has been working as a risk currency. So when the markets are worried, we're seeing the US dollar and Japanese yen being bought. So that's why we're seeing that, Shahzad. So what will happen for the rest of the week, we'll have to see, because of this debate that's happening between, oh yeah, thank you, Kingsley. Yeah, fundamental analysis. Yes, well, you can learn this by just coming along, Kingsley, to my webinars Monday and Wednesday. Follow me along on Twitter. My tag is, I'll give you my tag there, Giles Coughlin CCA. You can also follow me on LinkedIn, and I have a number of different things. If you are a HYCM client, we have another webinar on Wednesday, and you can also contact me directly if you're not a HYCM client. I have some packages which are well suited for learning fundamental analysis. So I've just sent you my email. You can always send me an email there if you're not already a HYCM client, and I can show you about how to learn fundamental analysis. Pound will be strongest currency of the week. Now, what's going to depend for the pound, Shwa? It all depends what happens between this a deal between the EU and the UK. If, as formal negotiations start tomorrow, and if a deal is kind of organised and looks like it could be going ahead for the 15th or 16th of October, then that will be very good news for the pound. At the moment, we don't know, Shwa, because if the deal breaks down, then we're going to see the pound selling. So what I'm doing, I'm being flexible, and I'm waiting to see what happens. And I want to see some clear direction on the pound. At the moment, you can't tell what's going to happen yet at the moment, Shwa, because will Michel Barnier and Mr. Frost, will they arrange a deal tomorrow or not? We can't tell. All we can see is what happens as it takes place, and that's what we need to look at. So follow along on a good website. I'm going to give you a free website here. Okay, that's a good website. I do some work for these guys, and their news service is based on Reuters, Bloomberg, and there's some great analysts there, so they can keep you locked into this. Yeah, we look at pound yen. Sure, we can look at pound yen, no problem. Let's drag it up here. Okay, so let's just have a look at pound yen. Okay, so the bias for the pound yen is to the downside for the same reasons, because we've got rising COVID-19 cases in the UK, the end of the UK job furlough scheme in October. We've got headwinds for the UK economy. We've got Tenreo, who was speaking over the weekend, suggesting that negative interest rates could be, an option for the UK. The only thing that's causing the pound to rise today is the optimism about potential Brexit deal. So, Titus, this pair has a bias to the downside, but if a Brexit deal is organised and arranged, then that's very positive for the pound yen. Okay, so you can see pound has come into that near-term resistance level. So we would expect to see some sellers at this level here, because we just get up into that resistance level. You can see that was resistance over here, 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 and here. So we are seeing some sellers at that level, but the pound is rising on optimism that some EU Brexit deal will be done. Now, it's hard to know what's going to happen, and it's a bit of a guess. It's a bit of a guesswork here. There isn't a clear direction. So it's always best in the markets like this just to stay aside and wait. But as soon as we get some clear direction, then we'll know what to do. And if the pound and if the UK ends up getting a Brexit deal, then expect this, expect the pound yen pair to hit 142. Okay, but if the Brexit deal is not done, then we could expect pound yen to be more hitting 130. So we really, it really is a wildly different set of outcomes for the pound. Okay, guys, thank you all very much for your time. Don't forget to come, if you are an HYCM client, please do come on Wednesday. And I know many of you who are here today are there on Wednesday. So I look forward to taking us through some more specific details on Wednesday, and perhaps we'll get a little sense of the path of the US dollar after the Biden and President Trump presidential televised debate has begun. So that should hopefully provide a bit of clarity for us there. And if this is your first time on joining us, a very welcome, good to have you on board. And please do come back and get in touch. Yeah, thank you, Titus, Shahzad, Ehsan, good to have you. Take care, everybody. Thank you all very much. Good to see you. Shua, Salvatore, Abdullah, I'm glad you can make it for the first time. Selva, glad you're here again. Shahzad, I'm glad that you made it. Great to have you on board as well. Chibivan, as always. Warren, Suneth, Lolu, great to have you. And Ihsan Hasib, thank you all very much. Take care now and have a very good afternoon, and just watch out for that Brexit vote, the Brexit formal negotiations starting again tomorrow. Big risk in the pound, so keep yourselves nimble and careful around the pound. Okay, now, thank you all very much. Take care. Goodbye.